Hello and welcome to Stock and Roll, the podcast where we deep dive into the world of equity compensation. Today we are near Rapperswil in Switzerland with a beautiful view of the lake. And today we're joined by Michael Sterchi, a seasoned expert with more than 25 years in equity-based compensation consulting. We will cover how companies need to restructure their equity compensation, planning an IPO, and how to implement professional plan administration and navigate the maze of compliance requirements that come with public markets. Whether you're preparing for an IPO or just curious about equity transformation, this conversation offers expert guidance on turning private shares into public market success. If you enjoy our podcast, I will appreciate it a lot if you hit like and subscribe. Okay, then we're here with another podcast. This time we're here with Michael Sterchi. We are close to Zurich and also close to the lake. Beautiful sunny day. Super happy to have a very, very experienced advisor in our topic, Michael Sterchi here. Do you want to give a few words about yourself?
Yes, my name is Michael Sterchi, as Chris said. So I'm in the equity-based compensation area since many, many years, almost 25 years. So I have my own company advising clients globally, from Switzerland, globally, in designing, implementing share plans. So not only for Switzerland, but also globally. And I have clients, 5 people, startup company up to multinational listed companies. So
great, that's perfect. This episode, we will dive a bit into the compliance part, like holding shares, multiple jurisdictions, and deep dive a bit into those aspects. And of course, like a bit of the changes that related to those items happens when you IPO, and also like what's ongoing in a multinational company. So if we start off with the first question saying a bit like, let's say we are a non-listed company, a growth company, with ambitions and soon to IPO. In terms of like going from a spreadsheet over to suddenly having listed shares, what's the kind of things that will have to happen in that transition on a high level basis?
I think that's quite a big project, big exercise you have to do. Not only for the equity part, but the entire company has to be prepared for an IPO. Mm-hmm. And I think one of the most important points is really to involve HR responsible person, or let's say the person responsible for the spreadsheet, to be involved in a quite early stage, because you have to put this information basically then in the prospectus. You have to do a prospectus to get listed on the stock exchange. These prospectus have to be provided to the authority to get listed on the stock exchange. And of course, there you need almost give a lot of information. You have to pump up your information. And the spreadsheet, to be honest, is not enough really to demonstrate that you're prepared for an IPO. And I think one of the points is also that you should also look to have a professional plan administrator afterwards, that you can demonstrate, okay, you have really your people, you can control your people, or you can control the equity your people hold in the company. Yeah, and I think that is one of the starting points. And normally you have a bank who is registered to do an IPO on a stock exchange to help you. And of course, then you have plan administrator with then working close to it, so that you're really prepared. Yeah, because what happens then actually is basically if you have done your homework, you get listed on the stock exchange, and from this day on, basically you have additional employee shareholders, and you have managed them, because you might have restrictions, you might have blackout periods, and other requirements you have to follow.
For kind of a participant in a program, like going from actually not doing so much with your shares, you don't need a share account, it's in a spreadsheet or a cap table tool, to actually being listed. how do you do you have to establish an account? Do you have to sign something? Do you have to do a KYC process? This may be a bit different from jurisdiction to jurisdiction, but based on your experience, are there any?
Yeah, KYC, of course, KYC is done with prospectus, with the investment bank, which is driving the listing of on the stock exchange. Of course, there the homework has been done, KYC and all these. Individually, normally, what I see that as an individual, of course, if you then have a bank account. Then, of course, you have to do the KYC as well. Then the plan administrator will send all the necessary information and requests to open a bank account. And if you have an omnibus account, then it might be a little bit different. Where then all the shares are just bundled in one account. And basically, this one account, of course, have to go through all the financial regulations. But this is done normally then with the IPO. And afterwards, you're a shareholder, you hold your shares, and I think you know more than I what as a plan administrator you all have to follow, what rules you have to follow at the end.
And with these kind of things, it's I think some countries are very on to call it individual accounts, or everyone have to kind of contact their own bank and opening their individual accounts. And I think you mentioned like omnibus accounts or nominee setups is a simplifying thing, at least. And in the regions that you work most, are nominee accounts common? Is it normal to have that, or do people actually go about and have to open local kind of own accounts?
I think it goes more and more into the direction of nominee accounts. So the opening of one personal account it still happens in some countries, so it's still necessary, but it's, let's say, not old-fashioned, but I think you start to try to maximize or to streamline a little bit that you have really an omnibus account, because you can show everything then on the tool, from the plan administrator, or if you don't have a plan administrator, this makes you gives you more work then, because then you will really have to go into this individual KYC. You have to open somewhere an account, brokerage account for holding these shares. And I think maybe one important point, especially if you switch from non-listed to listed, you have to consider executive trading rules. So on the stock exchange market, so you have to report the tradings from the executive. This is one thing. And of course, you have to follow the insider rule on the stock exchange. And I think they're almost, in Europe especially, they're all the same. You have to follow these rules. You have blackout periods where insiders are not allowed to trade any shares. And of course, you have reporting. For the executive, they have to report each share transaction they are doing, and sometimes they have to do it within 2 days or what. And there you have to be prepared really that you follow these rules, and so you have to have really control over, let's say, over the accounts and over the shares of your employees. That's one of the important things from a spreadsheet to shareholding at the stock exchange.
Would you say that that these things are also more difficult if you have individual accounts to keep control? Let's say you're the company employing people, and if they can go to their local accounts and sell, of course. Or do the company have a role in kind of controlling this, or is it like typically like the participant if it's an executive?
You might, because you have basically, you need to have a certain control, and if you have different bank accounts, if the individual can choose which bank account he or she would like, then I think this makes you some trouble, because you really need to control, because you need to get the information that they sell the shares, the executive, and especially for insider rules, you really have to consider and control that they cannot sell, or if they have vesting conditions or blocking periods where they're not allowed to sell the shares, just from a plan rule perspective, you need to have this under control. I think that is one thing, and Of course, you also have, in certain countries, you have filing requirements as an employer.
Yeah.
You have to report what you are providing to your employees, and this should be under control. Of course, you can still try to do this via an Excel spreadsheet, but this is, from my experience, really very, very, very difficult. And especially if you go into the Asian part, you have to do safe registration in China, a similar registration in Vietnam, and this makes it very complex. And therefore, it's wherever possible, you should control this, and you should really say, okay, you get your shares, but you have to go with this broker.
Yeah, and I also think that if you look at companies like let's say 10 years back in time, where it was less common with nominee accounts, more common with these individual accounts, and especially like in the Nordics, where it's a lot of the individual accounts still, because we have to do it, especially in Norway. But one of the challenges is that, like, if you go and you want to include 1,000 people, it's really hard to kind of do well enough instructions, and people go out and find your own and establish your own accounts, and then suddenly there's a deadline of when you need to have it, and you can guarantee that X% don't get it in place, right? And then you lose a lot of it, and it's frustration and a lot of negative things with it. So both companies control, but also simplicity for participants is something that I think I've changed quite a lot with this.
If you need to do a personal brokerage account,
yeah.
So I would suppose to my clients, just look at one broker, one bank, licensed broker account, and all have to be there. And then you open individuals accounts if you have to, from a legal point of view.
Yeah.
As I mentioned before, many countries changed their rules so that you can have a nominee account.
Yeah.
Which makes it much easier. But if you need your individual account, go with one provider. They have to go with this provider. Normally the employer pay also then the brokerage fee.
Yeah.
And this is the advantage for the employee, because if you say to your employee, listen, you can have it in your own brokerage account, but then you pay the brokerage fee on your own.
Yeah.
And otherwise, if you go with the broker we suggest, then we pay the fees.
Yeah. And from an administrator point of view as well, right? One of the hardest things to do generally is transfer of shares to local bank accounts.
Yeah.
So kind of then you need to be in contact with everyone, and you need to follow up, and if it bounces, right? So it gets, because of that, it's one of the most challenging things. It's also get very expensive for the company. So there's a lot of reasons why. Do you see any kind of challenges with nominee accounts? Any things that like are negative?
Yeah, of course, I think there are still some countries which are not familiar with this. So I think Germany was in the past very, 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 very reluctant on this, and you need an additional license. You can do this.
Yeah.
In the meantime, it works. So but I think nominee accounts are getting more and more common.
Yeah.
So.
And in Switzerland, since we're in Switzerland now, can you use a nominee account in another country? Is there any consequences of it, or do the shares need to be in Switzerland?
No, you can. But you normally, no, it can be outside Switzerland. I think that's not an issue.
No.
Of course, it has to be then somewhere contracted. So you have to follow these rules that the employer has a contract with a trust or whatever it is, and it can be outside. Yes, that's not an issue.
No.
But normally you hold the most Swiss companies, of course, they hold their shares with a brokerage in Switzerland, because the financial industry is quite strong here in Switzerland.
Definitely. I think it's many of the funds or the trusts that do this are located in Jersey, Guernsey, some in Malta, and so on. Because of that, it's always a bit like you at least have to go through and explore this for the countries that you have participants, so you don't end up doing something that you shouldn't. Or in some cases, also you can put people in a tax position. But I agree. Generally, it's by far the preferred solution to go.
Yeah, especially if you have, not only for Switzerland, I think it's if you are the headquarters of the company in one country, I think you have also most participant in this country. It makes sense to set up a nominee account or a trust, even a trust in this country. So.
Yeah, definitely. So we mentioned like bank and registrars. This is like kind of a term. So when you IPO, what is the registrar and what's the role of a registrar, and do you need a registrar?
Yeah, the registrar is basically they bring the shares to the stock exchange. That is one thing. That is something. It's a procedure with a normal IPO. That's more of a financial transaction with all the needs, as I mentioned before, the prospectus.
Yeah,
and let's say from the equity compensation part. So there are two. Let's say there are two key things from a compliance perspective I mentioned before. You need to know what your executive are trading, and secondly, you need your blackout periods, and because for insider trading employees, and it can be all type of employees, it not depend which grade. As soon as they have insider information, they are not allowed to trade during this period, and this you have to under control. This is the compliance part.
Yeah.
Also, if you switch as a non-listed company to a listed company, maybe your compensation mix will change, because this is something you have to consider the future. The future is already, let's say, demonstrated or already in the prospectus. There is a prospectus, what is your business plan, what are your forecasts and everything. And then, of course, you should align your new plan. You have your old plan, you should align your new plan on all these goals and all these promises as you make also in the prospectus, and then you have to fix this with KPIs on your new program. That is that goes into the transition into how do you do that. And I experienced that if you're really doing this well, that there is an early involvement of people responsible for the equity plan within the company, just to have the mindset, and you maybe also make then a kind of a workshop and think, okay, how is the transition? This starts with thinking about what people can cash in with the IPO, because in a lot of these plans, pre-IPO plans, you have, of course, the exit scenario where people are looking for and expecting a lot of cash they're getting. And then my experience is that you should consider that they cannot cash in all, because obviously you would like to keep these people. And if they get a lot of cash, then they might retire or think looking for other challenges. And you would like to keep, or you need to keep these people, because otherwise you also will not have a successful IPO. And if you cannot demonstrate into the prospectus that you have a nice plan in place where you can hold people in the future, basically you will maybe not be successful, because then they don't believe that you will reach your goals, because you might lose people.
How relevant is this into the prospectus? How detailed do you kind of go on the plans and the things that you want to have in the prospectus?
I would advise to go not too deep, but especially you should focus on, let's say, on the positive things. And if you can say, okay, 50% of the cash will be transferred into shares, into the listed shares now. And people have to hold these shares for another 2 years. This is a good message. Why should you not explain or give detailed information into the prospect about this, especially if you have the long-term incentive plan for top management, and you can really then demonstrate, they still have the skin in the game. They're still with the company. Of course, they get the cash payment, and basically that is, let's say, the payment or the bonus they get now for a successful exit based on the old plan, but you should also then focus on the new plan. And I think this is an important project which should be together with the entire IPO project, so that you really have a clear focus on the transition, and then basically also, okay, if 50%, for example, goes into the new equity plan, how does the new equity plan looks like? Because then you have on the list on the stock exchange. You will have your competitors on the stock exchange. Of course, you will then look also what are they doing. And of course, one important point I think is also, if you then design the plan and if you define the KPIs, that you really put your KPIs or you mirror your let's say your goals and your business plan in these KPIs. And of course also have a kind of a benchmarking then to your competitor. You see what they are doing on the market. So from, let's say, from a future compensation mix, what is paid in equity, what is transitioned into equity based on the previous non-listed plan, and then to really then focus on the future goals.
Definitely. No, I agree. There's a few other kind of things in connection with an IPO that is of course important, also related to the share plans, but not to go into the details of it, but how often are you kind of seeing accounting as a challenge? Is it something that you feel that also companies need to prepare for and have kind of separate advisors on, or just a bit like your view on the IFRS too?
I think my experience is you have different type of companies. Companies which are already very well prepared. And of course, most of them, they have still local GAAP. And for the IPO, anyhow, they have to go into IFRS. And afterwards, they have to be into IFRS to be listed on the stock exchange. So with the IPO, they anyhow have to prepare the accounting on IFRS. And of course, for equity, they have to consider IFRS 2. And this is something which is also part of the transition. So we might end up having more burden and more review, or just providing more accounting information than you had before. So and if you did your homework already before, then it's just a transition from local GAAP to IFRS 2. I also have experienced that in the local GAAP account, anything was considered for the equity compensation. So no provision, no nothing into, and there you might then have more challenges, because that is then, I think, the last moment you really need to change to IFRS 2 account.
And obviously, like some companies, if you have not the biggest plans and not so much history and not a lot of like share splits and corporate transactions, like in the recent history, it can be a big project, and it can be a bit simpler as well, dependent on how much of these things there are.
But is anything something you have to do in the homework when you do the prospectus and everything? That is something. It's not nice to publish. You have to publish.
100%. I also had one question related to, like in the recent 3, 4, 5 years, remuneration policies and remuneration reports are kind of things that more and more pop up. EU regulations coming in, some countries adapted it fast, some slower. is this things that you typically are involved in as well, or because that's more on an ongoing basis, right?
Yeah, that's something, which I'm involved in, and I think it's also part of this transition as well. You have also to be prepared. Before you only had your spreadsheet, and the investor more or less said, okay, now we give an additional 100 shares to these people, to these people. So it's more a decision on, let's say, of course, of the board, and of course, at the end of the investor.
Yes. Yeah.
And now you have to be prepared that the shareholders are involved in this. You have to have your remuneration policy. You have your annual compensation report, which is part of your annual financial report.
Yeah.
And so you have to be you have to consider this if are in advance that you can provide this information.
Yeah.
And you are also prepared to do this to do these reports. And some reports even need approval. In some countries, these reports need even approval from the shareholders meeting. So,
do you see like a difference in the countries that you work most? That there are some countries where they do more on, call it like the reporting compliance, that it's more standardized, and some that are more a bit based on what the individual company wants to do, or is it pretty much the same?
I think most of the European countries, they have now clear guidelines what at least have to be published into a compensation report. Some countries say you need an approval then. And of course, there might be still some countries maybe outside of Europe because they are already rules into the European Union. What you have to publish, where of course you don't really have clear guidelines.
No.
But normally you then, or if you listed on one of these stock exchange, you might be fine. You have to follow these rules. But if you are listed on a European or whatever other mature stock exchange, you have to follow these rules, and there are clear guidelines. Of course, you can still keep it short and just provide the information you need to. But that's something which I experience more and more. Shareholders would like to have more information about it. Of course, there are then companies which are a bit reluctant, say, okay, we would like to provide this information. There are some reasons for it, especially if you have special KPIs, which goes into your weaknesses. You would not like to present this to your competitors. And of course, that is a little bit something you mix up.
Transparency versus some secrets that gives you competitive
some business secrets, so which you would not like to share. But I think there are no rules in place from a stock exchange where you have to provide all these details information, because that is something which is not practical, because you have to have a certain privacy that you can have the possibility to not show these business sequences or these special KPIs. So I think you can tweak around. I think it's quite a challenge then to think about your strategy with your compensation report also. Would you like to have more transparency, or would you like to share only what you need to share?
No, definitely. No, I think it makes a lot of sense. I think we're kind of covered the topics that I wanted to do on this compliance things, and it's obviously like tons of things we could have double-clicked more into and dived into, but it gives at least a bit of an overview on this. So for me then it's left to thank you a lot. It's been amazing to talk to you, and you have a lot of insights and things to kind of fill the listeners with. So thanks a lot, Michael.
Chris, was nice discussing with you this topic, so I like it. So it's one of my passion.
Definitely, and we'll make sure we find another topic to cover with you later, Michael.
Perfect.
Thanks.